Netflix had another good quarter. You know, they added a lot of subs,
right,
mostly internationally and more domestically. I think, you know, the stock took a little hit last night because in Q2, the subscriber growth is going to slow down a little bit. That's really for two reasons. The first is the summer is seasonally slow, so they sort of always have that happening this time of year. And the second one is that they're pushing through some price increases.
Right.
And, you know, what they said last night was that they're not really seeing any impact on the gross ads, so like the new subscribers that are coming to the service, but they are seeing a small amount of existing subscribers turning off the service when they see that price increase come. But importantly, and unlike past price increases, they say they're going to be completely done with it by the end of this coming quarter. And so that should mean that after Q2, you know, the subscriber outlook can start to look a little better.
What did you make of the idea, and Ed was alluding to it earlier this hour, that come next year, they're not going to be taking on, you know, they plan to actually use their own cash to operate this business and to invest in programming?
I mean, I think that that they said that, you know, whether or not they actually do it, I think is another question. It's definitely a full-on arms race in terms of originally produced content between Netflix and Amazon and HBO and now Disney and Apple. So, you know, the real winners are the content creators, but
can they take their foot off the gas on that side, on the content side, though?
I don't think they can, and I don't think they will. That's clearly, you know, what is driving the subscriber momentum.
Are you sure about that, though? Because, you know, everybody anecdotally will always say they go through Netflix. There's so much content there that it's just so hard to surface all of it in a meaningful way to actually market it. And I know they're individually marketing specific programming to me relative to somebody else, but if you cut back a little bit on it, do you think it would actually change things meaningfully?
Well, maybe in the U.S. and maybe for the typical U.S. subscriber, there's sort of plenty of content, and just keeping that fresh from now on is a decent strategy. But they're trying to do local language content in all these markets like India and Brazil and Mexico. And so as they do that, that's a big investment. They did talk last night. It was really interesting for sort of the first time about how do they go in markets like India and reach the, you know, the less wealthy households. It's a very premium priced product in those markets now. So they talked about tiering the product a little bit, making, you know, sort of different plans for different price points.
That's what I wanted to ask you. I mean, international has always been a pillar of the bull case. So is there a concern that it'll be international expansion but at a cost, because there's this acknowledgement that they have to go lower in price for big markets like India?
Well, it's definitely, when you think about key questions for the company over the next 3 years, it's definitely an important issue. They clearly need to figure out a way to reach more consumer households in places like India without repricing the existing base that's paying the full fare. And that's always an issue for companies.